I texted Ken when they did that. He was gonna make it.
Casey was maybe.
He was a maybe anyway. He's traveling or not quite sure what's happening. So
There's no plans.
something. Somewhere along the line.
No mail for 3 days.
I texted Ken.
Are we ready everywhere? We're gonna
He was gonna make it.
Casey was replay on there.
He's traveling or just a simple majority.
Yeah.
For the truck.
Yeah.
So it doesn't feature.
Can everyone hear us?
Is that Santa Claus we got running the meeting?
Yes, sir.
Does it? Yes, yes.
We should have put your on.
Yeah.
That would have been fun for tonight.
Yeah.
We need to because it's coming out, money's coming out of the permanent fund.
You're all set.
Are you ready? Got all our mics on, quarters on, ready to go? Okay, we'll call the city council work session December 20th, 2023 at 6 p.m. to order. Roll call, please.
Mayor Allison,
Here.
Tom Baylor.
Here.
Kathy Sherman,
Here.
Casey Kinsman. Absent, Wendy Rainey. Here. Ann Schaefer. Here. Kristen Carpenter.
Here.
Ken Jones.
Here.
Here, work session topic tonight is City of Cordova investments, presentation and discussion with Blake Phillips. Turn it over to Sam or Blake.
Let go, you ready?
Yep, happy to. I'm sorry, how much time again, Sam, do you want me to take roughly here?
45 minutes.
45, is that what you said? Or 20?
45.
45, great. Okay, so thank you all for having me this evening. My name's Blake Phillips. I'm a director at Alaska Permanent Capital Management. We recently partnered with the city through the recent RFP for a new investment manager, and we're just finalizing the process of having those transferred over to a new custodian, KeyBank, who I believe you previously voted on there. Tonight, I just wanted to give you a quick history and background of the firm, and then have a work session to just kind of talk about the goals and kind of the investment process of how it works with Alaska Permanent Capital. And then really happy, time allowing, to let anyone ask questions of whatever they would like. With that, I'm going to share screen real quick. Can you guys see that okay?
Yep.
Perfect. So just to give some quick background on Alaska Permanent.
Oops.
Did we lose him?
Can't hear you.
Think we lost your voice there, Blake.
The realization that there was no national quality level investment expertise in the state of Alaska to being provided for all of the different communities that could really also understand the unique kind of circumstances that we face in our state. So he started our firm with the express intent of doing that. And over the last 30 years, we've grown to manage over $5 billion under management and advisement. That's 100% Alaskan clients and comprises public entities, Alaska Native corporations, nonprofits, utilities, but all focused within Alaska. Another important thing is all of our accounts are separately managed. And so what that means is, for you anyway, is all of our decisions have everything has no bias to anybody else's money. It's not like a mutual fund where you're invested with a bunch of other people. We can change the strategy of the fund, only specific to what the city's wishes are. And so that's really important. You know, that's the feedback that we receive from council and staff about, you know, goals and different things. That is, you know, 100% what drives our recommendations and management of the portfolio. It's also equally, if not more important, that we are a fiduciary. And what that means is that we are legally obligated to make decisions in your best interest. And our entire platform is built around that. So we have no other source of revenue other than the direct fees that we charge our clients. We do not get any trading commissions. We do not get any commissions or revenue sharing from using specific investment vehicles or funds. So everything that we can bring to you has no conflict of interest. As I mentioned before, we started in, and it continues to be our biggest focus, is working with cities, boroughs, and other public entities within the state, showing, you know, well over half of our assets. And that comprises everything from things like the North Slope Borough to the municipality of Anchorage's cash management, to city of Sitka, their permanent fund, out to ADAC. So we are all over the state and really tied in to a lot of the different issues that are faced by the local Alaska communities. I'm very confident. You know, I grew up in Alaska, spent some time in New York working in an investment bank, worked for an investment firm in California before I was able to come home about 7 years ago and start with APCM. There is no one that can compete with us on, you know, the level of kind of partnership and depth of experience that we have within the state. So we're really excited to be working with Cordova as well. And I think also is to realize is that, you know, within our fee encompasses everything that we do for you. And so that is not limited to just, you know, managing the investment portfolio. It really is broader than that. We can help, you know, we'll help with code changes, you know, policy development, you know, whether we manage everything from permanent funds to bond proceeds. You know, we work with the Alaska Bond Bank, who often issues those on, you know, working with the cities and other municipalities. We can assist with, you know, cash flow preparation and like what, you know, how much money is, you know, potentially able to go into different things, setting up accounts for capital reserves. You know, there's a dock going in. We're going to have a bunch of money in the front end, but it's not going to go out for 3 years. How can we capitalize upon that? You know, we're going to be talking about the permanent fund today, but those are all kinds of things that we can help give guidance on and be a resource for you. Before I get into the investment policies questions, which is going to be kind of the main focus this evening, I was wondering if I can answer any other questions on the firm.
I think we're good.
Okay, great. So I neglected to put this slide in, but the backbone of how we manage our portfolios is something we call the PAIR process. And what that is a cute acronym for plan, analyze, implement, review. And so what that means is, you know, we are not a manager who's going to come in and just tell you what is the best thing to be investing in. Our process is much more oriented in listening to the client and then bringing back an optimal portfolio that seeks to meet all of those goals and follow any constraints that are necessary. And so we're in this planning phase right now. And what we're doing is looking to gather information on these things that I have laid out on this slide here, which are kind of the objectives and constraints of the fund. Some of them I think we have an understanding of, but the other ones I want to have a conversation with you guys about. And so, and this is also something that this isn't something that's going to be written in stone, even though some of it is written in code already, and we will make potential changes to that. When we're talking about the investment policy for this, you should think of an investment policy as a living document. And it's something that we're going to be reviewing every single year. Even if there haven't been changes in these areas, we want to go back and confirm those. And another important piece of continually reviewing is there's change at in staffing, there's change at council level. And so kind of memorializing why this fund is there and what it is intended to do is the way that we keep it. If you look at the time horizon line, which is the first on the constraints, of perpetual, the permanent fund's supposed to be permanent. Being able to really ingrain what this fund is for and how it is to be used, as you have, memorializing that within the council is really important to ensuring that it does stay around forever for the benefit of the residents of Cordova. So that's what we're going to be in, and these are kind of the key areas. And where this, I'm just going to flip over real quick, where all of this stuff comes out of, and we're already kind of ahead, but if this is a resolution that was passed back in, I guess 2000. Well, this was changing it, but kind of going over 2005, 2009, 2010, establishing kind of rules around the investment policy for the city. And this investment policy encompasses not just the permanent fund, but different areas. And so these are all things that we would, if we were making an investment policy that, for an entity that doesn't have stuff in code or statute or anything like that, we would be writing all of these into our investment policy. And these are things like the prudent investor standard, conflicts of interest. All of these rules are good, and we've reviewed them. These are things that we will come back to over time to make changes to, particularly when you get down to authorized investments. This is sometimes an area where we need just to change, what is allowed, or sometimes we may want to remove something that previously was allowed to be invested in. But currently, you have quite it's a pretty well laid out as far as authorized investments. But like, for example, alternative investments is a bit vague into what that would allow. We might tighten that up down the road. It's not necessarily for tonight's conversation, but you can just see alternative investments constitute capital investment not attributed to traditional asset classes such as equities, bonds, and money market products. I could read that as saying I can go invest in wine, which is an asset class for some people. But that's why there is certain elements of, we're always looking to strengthen these investment policies for the benefits of our clients, so that if we ever are not the manager in the future, there's still going to be a lot of nice constraints in here that if somebody else came in, they weren't going to be able to take this fund that has been, built and with, kind of discipline over years and come in and be able to. That's why you want to have these kind of constraints in here, because it's very important. It also has what's prohibited, such as venture capital, real estate properties, certain derivatives, those kind of things. And then what we're talking about mainly today is going to be the asset, or actually this gets into the permanent fund, but we're going to be talking about the asset allocation, which is going to be what the composition of the portfolio is going to be. But in order to do that, to bring forth a recommendation of what we think is a couple appropriate options, we want to go through these kind of questions with everyone, so that we can kind of get on the same page. And some of them, it's important to think about too, is that, and the reason it's nice to do it in kind of a work session setting with everyone is so everybody can have their input, especially around things like risk. Everybody has their own way that they think about risk. And so we're going to try to put in some absolute terms for you too, when we actually roll out those. But like, that's probably one of the most important things, because risk tolerance, one of the fastest ways that I think anybody can make poor investment decisions is to set an investment strategy, just for basics, say, like, we just want growth. We're fine with that. And we can deal with, the volatility. Well, then you hit something like COVID and you have stocks down 30% in a month. And the biggest thing you could have done to hurt yourself in that category was decide, wow, we have way too much risk in the portfolio. Let's de-risk the portfolio. You end up at a less risky portfolio, but you're solidifying those losses. And so that's why it's really important that as we're going through this, that you get comfortable, and that risk is usually the thing that knocks people's, confidence in a strategy. And so that's why, if you are the most conservative person, please voice your concerns, because we want to be at the appropriate level of risk that everybody's going to be comfortable with. We can tell you what you're, with a permanent fund, between that and what kind of liquidity goals you have, which would be distributions from the permanent fund, we can tell you what your risk capacity is, what would be a prudent thing to do, but your risk tolerance is going to be subjective, and it is dependent upon the feeling of the council and also the councils in the future. So that's important to think about that as well. So I think maybe to start it off in kind of an easier spot is talk about what the long-term goal is for the permanent fund. In code here, the objective of this investment policy is to maintain purchasing power of the corpus, attain a market rate of return through cycles, and invested using a balanced investment approach with prudent levels of risk, investment allocation, and based on statutory constraints. So that's what we have in code. I guess Sam, what has been the historical, if draws from the permanent fund? Is there a set level, if any?
No. Historical draws have been pretty limited. Done some loans within to like the enterprise funds for trucks and equipment.
The biggest was keeping the hospital going for a few years.
Oh, yeah, the hospital, yeah, did a few, at least 1 million out, that I remember.
There was a few years that it was about $1 million a year for a few years.
That's.
But it hasn't been that way for, in several years since they needed any draw.
Yeah.
So this is, an incredibly important topic, because, I think, as a council or staff, when folks, because this is a nice pot of money that is owned by the city for the benefit of the city. And so it's one of those things that it really does, over time, people are going to want to come in and spend that pot of money, and not have it be a sustainable source of money. And so sometimes having that kind of language in there is important. So, because right now, otherwise, I guess the limitations on what can be taken out, or a goal of what it could support. Because a lot of what we'll focus on is, for example, we manage the City of Fairbanks Permanent Fund, and we've been working with them for, I think, 20 plus years, and it's grown to about $120 million or so, and they utilize it to take a sustainable rate that's budgetary contribution at this point in time, and they set that rate around, I believe it's at 4.5%. And that's a level that we can view as being sustainable, while also being able to inflation-proof the corpus, which is directly in yours, is inflation-proofing the corpus. Once you get above a sustainable draw rate, you are going to start depleting the fund. Similar to what we hear in the news about the Alaska Permanent Fund quite frequently, is if we go above what it's earning and inflation-proofing and go through the earnings reserve, it will go down over time. Same principles apply here. So I don't know if and it's not something that has to be established now, but it's something that some kind of limitation on what the distribution can be is something to be thought about. You know, right now we're going to be on the path of recommending, you know, kind of, we'll show you a range of kind of models that we can kind of start with as far as where those will go. And there's no need to necessarily change the objective of the fund currently, but it should be something that is thought about, because that's the kind of tool that, or the kind of backing you want to have when people come to say, why aren't we spending this all right now? I don't know if anyone.
I think it's worth mentioning that it's a pretty high standard to pull out of the permanent fund. It takes 7 votes.
Mhm.
So there's a little bit of a protection there as far as maybe a couple people wanting to just spend the money. It does take 7 votes, and I think if the mayor also gets a vote, I'm not sure on that, but it is a fairly high standard to pull it out.
Okay, that is good to know. And so if I could, so taking, you know, what we have in code and given historical actions of really trying to be limited on pulling it away, long-term growth is that a reasonable kind of primary goal, we could say?
Yes, yeah.
Probably conservative. I mean, we're not looking for risky investments. And I think, given that it's public money and we have to be sure that it's available, I think, I would guess that the risk tolerance is not super high.
And I guess long-term growth, but growing the permanent fund too, that's what we've been struggling with. Balancing budgets, at the end of the year, we have nothing to contribute to it, we end up taking from it sometimes just to balance the budget, and I'd prefer not to do that. Love to be able to contribute to it, just as the former councils that set it up did for us, our rainy day account.
Yeah, and you know, another thing that this probably be a little kind of down the road once we just get an new allocation recommendation in is, but maybe sometime next year we can go through kind of some modeling and things, and we'll show those with the recommendation too. But it gives you, there's a lot of tools, and when I say we can be a resource for you when you look at doing planning or something like that for different projects. Is, what does it look like if we are able to contribute $500,000 a year and not draw for 10 years versus not contributing or having a draw? And it can give you an idea of like what where you can be, in those 10 years. Or if you want to look at specific targets, like what are we going to have to do to get the fund to $50 million? Or what do we have to do to where we can sustainably draw, $500,000 a year for budgetary stability? Those kind of questions. So I just wanted to throw that out there, not for particularly for this discussion, but just to keep in mind that kind of like these are the kinds of things that we can be a resource for you, because as you guys are fiduciaries for the city, we want to be able to provide you with any information that we can help as well. So risk, I'm just going to touch on. Maybe I'll jump around here a little. So we've covered time horizon, perpetual, and meant to be around for generations of residents. Taxes not a consideration as a public entity. Liquidity, this is what I was kind of tying into risk. Liquidity also has a very big effect on the amount of risk that we would think can be prudent to put in the portfolio. So for example, managing of the operating funds that where you're going to have, needs for payroll or equipment or those things on a monthly basis. It's almost never appropriate to put things like equities in there, because you're going to have those balances moving around so much with market forces that you jeopardize liquidity needs, or put yourself into a point where you're going to be forced seller because you need to make that cash available. The permanent fund on the other end of the spectrum doesn't have that constraint because you're going to be drawing, at least currently drawing nothing, or drawing smaller, small amounts as a percentage of the overall fund. That allows you to have more, or makes it easier to take prudent risk with more equities, which are going to be more volatile, because you're not having, you can deal with those downswings. And it's also, I think, the way I like to talk about it is, for the higher amount of return that we're doing, you have to pay for that in taking higher amounts of risk. And so I think just in general, that trade-off is, something that has to be expected. If I could give you a super high return rate with risk-free, then I would just do that for every single portfolio. But that's why it's so important to have these conversations, is because it's unfortunately not that easy. So with that, I'm going to jump forward and we can start talking about, I'll give you some, so these are, we start with these models, and it kind of, what they are is mixes of about 11 to 14 different asset classes. And we'll get more in depth on those, what those asset classes are. That includes large cap, mid cap, small cap companies in the United States, international developed countries, emerging markets, real estate investment trusts, commodities, infrastructure, a variety of different bonds and cash equivalents. So those are all be things that we'll show you when it comes down to kind of selecting what kind of allocation we want to go with. But for the time being, we have it. These pies represent how we break them into bigger categories, which is going to be kind of risk assets. So think of those as primarily like stocks. So stocks, all global stocks. That's going to be where we're really seeking the return. Then you have risk control assets, and that's going to be primarily bonds and cash. So that's where we're looking for our anchor in the storm when it comes, is when this part of the portfolio is not acting well. We want to be being shored up in the defensive piece. And then we have alternatives. And alternatives is where is kind of, they give unique characteristics that are not within necessarily in stocks or bonds as much. And so that's where we place things like real estate and commodities and infrastructure that might have, different reactions to interest rates, inflation, a variety of different factors that they're going to behave differently than stocks or bonds. And amongst all of these different asset classes, you're holding thousands of securities. So we do not pick individual stocks for these portfolios. We're investing in primarily exchange traded funds and mutual funds to gain access to these classes. Again, we have no APCM branded products. So you won't see us double dipping by advising you on where to put your money and then putting it into an APCM fund. We wanted to have an unbiased platform so we can always be picking, the best, only be presenting the best things and where there's no conflicts of interest. And so that's what the kind of the pie at the top looks like. What we'll do after, we finish this session is taking that back and then deciding what to recommend from portfolio wise. But this is what the options when we bring them out will look like. And so I'll just work down the chart here. So this is the, model 4 would be probably on the conservative end of what we would recommend for a permanent fund. And then model 6 would be more growth oriented. We have models above and below these, but this is kind of a general where I would say 90% of permanent funds that we manage for public entities live as far as the risk and return profiles. So on the lower end, you can see that the annual return is expected to be 7.1%. So any given year, we expect the fund, on average, we expect over the next 10 years that the return on this fund will be 7.1% in any given year. in that, with a 95% confidence, and all of these numbers come out of modeling software that we utilize, where we take all of the individual components of the portfolios, and we do something called a Monte Carlo, which runs 5,000 different scenarios and basically takes into account all sorts of different economic situations, inflation movements, interest rates, global economic activity, and really just kind of takes into account what those can do and over time. So that's over 10 years. And that's where these numbers are coming from. And so 95% of the time, to obtain that 7% return in any given year, we would expect it to be anywhere between down 9.4% and up 25.7%. So when we go into a bad period of time, we also, or when we go through any given year, if it's outside of this modeling, something is off from what we expected, and that deserves immediate attention. I really can't recall when that has happened. And then we also look at average loss in extreme conditions. And so like when we went into the COVID crisis, that's where this is just an over time number. This is not where any of the modeling ended up. It also gives us all the data of what the path looks like. And so these are the numbers that are really where to focus, I think, when you want to kind of have the oh darn moment and say, things have really gotten bad. COVID, war, something like that, where we have a real gut check in the market. And when we get these kind of numbers. And so when we, I guess, like having this conversation here, and we can have it, if we utilize the portfolio that looks something like Model 4, is everybody willing to, over the course of years, but potentially next month, be willing to see that, not where we lock in and that's where it ends, but over the course of time that we can have that kind of path. I don't know if anybody kind of wants to ask questions about how we're talking about the risk, or if I'm explaining it clearly enough.
Go ahead, Kristen.
Hi, Blake, this is, Kristen Cordova. I do have a question in general, just about, using a filter for investing and like looking at environmental, social, and governance, aspects of the investments that we might be making. And if you have other clients that do that, and if the firm has any experience with that.
Yeah, we do. We don't do a lot of it. I think there's an inclusive and an exclusive way to do it. Usually what in the areas we have done it. So in individual bond management, we do I said we don't do individual stock management, but in our bond management, we'll do, we do pick individual bonds. And so the problem with, I think I'll start at the top, actually. The problem, or where it gets difficult with environmental, sustainable, and governance investing, ESG, is that it means something different to everyone. And so oftentimes any funds labeled as that, or those kind of things, does not necessarily, ESG investing probably means something different to everybody sitting in the council chambers today. And so it's a very difficult line to walk. And that's why you see a lot of talk in the media now about like, oh, is this a sham, or what is, what's it, it's clearly important that a lot of the things that it's seeking to accomplish, but how you implement that is more difficult. The way we have offered to do it on the bond side is kind of, if there is something, which is not really what we're talking about here for the permanent fund, but is to, if there are certain arenas that people do not want to be involved in, we can exclude them, whether that be oil or firearms or, other areas of vice, things like that, where we can kind of remove those from the allowable investment kind of thing. We don't use it as much within the permanent fund portfolios. We do, like, one example I can think of that goes two ways is the commodities asset class. That can be something that can be excluded from them if there was we've actually excluded commodities, not as much on ESG, so much as some of the other regions that are extremely levered to oil, more so than some of the southern areas. So they want to take that kind of investment risk out of the portfolio. Sorry, kind of getting roundabout, but that I would say that the definition of what ESG is difficult. We do have, there is the exclusive, or kind of excluding certain investments from the purview of what we'll do, and then we'll definitely never put forth like a specific type of compounding on it unless it was directed. But if there was something that you wanted us to explore in a certain way, those are always questions you can ask and we can take a look at.
Thanks. Yeah, I mean, I recognize that we would have to make a decision as a group if there was something we did or didn't want to be invested in. I just wanted to know more about your, the firm's approach to it and what kind of experience you've had with it. But yeah, that would certainly be a council decision.
Yeah, absolutely. And I guess I mentioned that because in that we do all do separate accounts, so we can try to implement any kind of direction from the council, or at least give you you can throw that at us and we can see what we can come up with as far as options for that.
Mr. Mayor?
Yeah, go ahead.
Yeah, that's certainly not a concern for me. It's more of a let's invest in some good companies. But I think it would be helpful for everybody as far as the risk is I don't have the number in front of me, but the market in the last 20 years or 30 years, you can pick whatever time frame you want, has returned. I believe it's like 8%. So even if we do hit that down year, we're down 21%. It's not like we need to take that money out of the bank to pay a bill. We have time horizon that we can wait. It will come back. It always comes back. So I'm not really worried about that as long as it's wisely invested. And so anyway, those are my thoughts on the risk.
And I would agree with everything you said, sir, except for the always piece, because I'm legally not allowed to say that. But it's a very that is exactly what I think is a good way, like the risk capacity, the tolerance that the capacity for risk that you have within a permanent fund with the long-term time horizon is there. But it's the success of that strategy that does, these strategies that do have some volatility, it's not going to be sunshine and rainbows like every day, but as long as you stick to the strategy over time, it's extremely effective. Where you get into danger is during these extreme condition periods, and don't stay in the saddle and stay true to the discipline. And that's why even at the beginning I was kind of talking about how important it is that the council is always we're always renewing why this is here, what it's for, and what in passing on that knowledge.
Well, if you're out of the market for the last 2 months, you've missed the complete recovery. So it's a good example of why you got to stick with it.
100%.
Anyone else?
Yes.
I was just gonna echo Councilman Baylor's comments, because we just did our personal banking today, and I looked at my investments and I'm back to where I was 2 years ago. So we always look at things long-term, and that's the way I guess I'm trying to look at this for the city as well. And I would be a little bit less conservative and probably have a little bit higher risk right now for the city so that we could grow the fund a little bit more. We're looking at a new high school in the future. We're looking at the North Harbor project. There's so much on our plates, and I just think that we can, if we look at it for the long term and the long run, I think we could go a little riskier just to build up that fund and feel more confident for our future. I think it's a great asset that we have that we're not utilizing fully. And I'm excited that, we can maybe do better.
And ma'am, you sat on this slide that I just switched. So I've been telling you about kind of the ability that you have to take that risk with the long-term nature of the permanent fund. And so really, and the required is kind of an unknown at this point. It's, we want it to be, the required elements are, we want it to be there into perpetuity. So that does give us it kind of sets a ceiling on our risk, because we don't want to take some risk which would ever jeopardize that, right? But then the required on the kind of the lower end is necessarily as much there, because we don't have a need that we've identified. So that's kind of a bit of the gray area. And then the willingness this is really what we're digging into here. And so, the want to grow it, and then just the willingness to accept that risk. I'll stop there because I know we don't got much time.
Another comment is, I'm assuming that the whole pie isn't going to be in the more riskier assets. You're going to bundle this thing up into a portfolio, and we're going to have some things that are a little more moderate, some more a little risky. So it's not like if we have a down market, we're going to lose our shirt all at once. So I guess I have faith in what you're trying to accomplish here, and I would definitely go with a little more high risk.
Yes, and then the answer is to absolutely. So, and that's why these just for these big kind of top-down conversations, we do break it out this way. So you see, even in the kind of the most growth-oriented portfolio here, the risk assets are only 58% of the overall portfolio. And that's, again, thousands of securities across the globe, probably 40, call it 40% US stocks, from large companies to small, to international big companies to emerging companies. So you have thousands of securities that were getting that, and that's 60% of the portfolio. Then you have 20% in bonds and cash, and then 21% in things that kind of add more diversification, like real estate and infrastructure and commodities that can provide some inflation hedge and like those things. But yeah, so we try to, and for example, these portfolios, really across the board here, like a Model 6 portfolio, if you look at, I think global stocks were down about 20% last year. The US bond market was down 13%, and I believe this portfolio was down 12%. So that's what that diversification across so many different types of securities and asset classes, companies, and all of those things that we try to get as much diversification as possible, enables it to where it can sometimes outperform like the two biggest components of it.
Well, for council's benefit too, it's been hard to get the numbers from our previous asset manager, but I did get some a few years ago, ran around, and in a 10-year stretch, we averaged 3% return for 10 years. Now you compare that to 7% return, which you would double your money in 10 years. At 3%, we weren't even keeping up with inflation. So, the downside of not getting out there and taking a little bit of risk is you basically lose money.
And that's a stated objective of the permanent fund, is to maintain the corporate purchasing power too. So. So I know that I'm at the end of my 45 minutes. I have all the time that you would like to take, but so given kind of where we're at, I think, we'll probably bring forth, would you like to see kind of we'll probably bring forth like a Model 4 and a Model 6, just so you can get an idea and give you a spread of what that growth versus a more conservative looks like? Or would you like, I can bring all three? I don't know, but I mean, just based upon my initial feedback from everyone, those are all going to be prudent choices to start with. And we will walk through the specifics of those models before we, kind of decide on one. But I want to make sure that I'm not off base here and what I've heard. If anyone has any questions about that or would like to see anything different.
I'm okay with that. I'm okay with that. I think I'm mostly just excited about having an investment firm that communicates with us. And helps us move forward. So I guess the communication is really important to me, and that would be helpful, I think. I'm leaning towards 6, so I'd like to see both.
Yeah, Kristen?
So you're gonna come back to us and we're gonna talk in more specifics about,
We will before we can. We need to serve. I think one of the it's not laid out specifically in your code, but we'll probably establish, just to make it clear and have it be memorialized, make perhaps a resolution that establishes the asset allocation. And it also actually, along when we show those models, which basically defines what the target weights are for large cap stocks and US bonds and the various asset classes, we actually also put ranges around them. So not only are we defining, so for example, say if we had a portfolio and had 20% allocated to US large cap stocks, we probably would further go and say we limit the discretion that we have to trade around that from between 10 and 30%. So even in the most aggressive, we could move it to 30%. That just provides further restraints on what we can do within the fund and further define kind of the risk levels that you're accepting and allowing us to take. So it'll have more detail around that.
Yeah, go ahead.
thank you. So I had two things that I wanted to, I guess put on the table and just, we're not making any decisions tonight, but I wanted to see, or to ask if you could see what it looks like if we were to say that we would not want to invest in any funds that have Exxon Holdings. I mean, that's a company that has a pretty serious impact on this community and has lied to the public about the effect of climate change. So I'm just curious about what that would look like. It's not a decision, I just would like to know. And I also am curious if you would be willing to look into Greenbacker, if you are familiar with that as a fund, Greenbacker Renewable Energy. They have 3.6 billion assets under management for supporting renewable energy projects, and that might fit in your alternatives category. But I would just be curious to hear what you think about that as a potential, as one part of a portfolio. Thanks.
And I can explore those questions, give you the affirmative.
Yeah, okay.
Mr. Mayor?
Go ahead, Tom.
Yeah, I guess I just reiterate, let's just invest in good companies. That's kind of interesting, the Exxon thing. I've done well with Exxon, and what runs our whole community is commercial fishing, and those guys are burning $30,000, $40,000, $50,000 worth of fuel a year, which is what Exxon produces. So it's kind of interesting that we're trying to go that route. But I really appreciate your presentation. And is there anything in our investment policy that should be addressed? I would be interested to see that at your next meeting too. It was written in 2010.
Yeah, so we'll also bring any so the code that I brought up here, anything that given this stuff, what we'll do is we'll kind of put together what we would recommend for the investment policy, and then we'll also go through and see if there's anything to be updated. And sometimes, we'll even change, where's that off? Like for what we can invest in, for common, like exchange traded funds, common stocks, we might update these alternatives that I mentioned just to kind of define it a little more fully. We have some derivatives language too that I think is a little stronger, and so we will bring forth those. I think the good thing is I think we're going to be able to move forward just with a resolution adopting an allocation and those things. I don't think that I see anything in code that's going to need to be, get those two readings done in order to move forward. But I think that I think there is some areas we're going to probably want to strengthen over the next year here.
Okay, thank you, because that was a comment that our last investor made, that our policy was too restricting. So it'd be interesting to see what you have to say and what we come up with.
Yeah, I don't see it being that restrictive unless they were trying to do more exotic stuff with like, I mean, this is pretty standard. Yeah,
Well,
as far as prohibited stuff, I don't see anything prohibited that, I mean, we define the derivative stuff a little more, but in general, I would say there's more ambiguity in some of the language that I want to strengthen than necessarily restricting it from things that we'd like to do.
Well, that was the response when I asked why we're only doing 3%. So it might have been self-serving, their estimate on it. So.
Yeah, I mean, you got common stocks in here. If they would have had a decent chunk of those, that should have worked.
Okay, thank you.
Yeah, I'd just like to see all three scenarios come back. I mean, considering the fact that it's public money, I'd just like to look at the conservative, the midline, and the risky, just so that we are looking at all of our options. And then please don't use the word exotic. That makes me really nervous when you're talking about other people. Thanks.
Just a question from me, this is Mayor Allison. Do they already have custody of our permanent fund?
We're working through that transition, with Chris. He has been in and out of the office. I didn't speak with him today. I got an email from him today, and he's working on that transfer.
Absent any other direction where, if you guys were to get our money tomorrow, where would that money go in the meantime until we get these finalized?
So we'll be managing under the existing policy, reinvesting any cash that comes, we have, there's enough here that we can manage it to the existing policy, which is essentially code. So we'll be reinvesting any cash and investments. We won't be making a major change in the strategy until we kind of get run an allocation by you, because we don't want to change something and then change it into a different direction. So we'll be overseeing all of this stuff as soon as it hits KeyBank.
Okay, thank you. Any other questions? We don't have much for audience, but it's all staff and the hospital manager. Any other questions from before we do have to do our public hearing? So thank you for your report. We look forward to hearing more from you.
Thank you.
Yeah, absolutely. And Sam, I'll just check in with you about when the best time to bring forth those recommendations would be.
Okay, sounds good. Thanks.
Thank you all. Have a good rest of your meeting.
Okay, thank you.
Thank you.
There being no further work session business, we will adjourn the work session.